There we go. Hey, Mark, good morning. Thanks for joining us today. And good morning, everyone. For those of you that are logged into our event today, my name is Kevin Vincent, and I am the senior contributing editor here at Mining Life and Exploration News, which is a sister company of Vertex, which is the host of today's global event. Now, welcome to the Abitibi Mining the Abitibi virtual conference. Now, this special event has been made possible by a number of great companies, not the least of which is Kirkland Lake Gold. Those other companies include Mappy, they include Lakeshore Gold, Cote Gold, which of course is one of the exciting projects of IM Gold, Canada Nickel, another exciting company, and of course G4 Drilling, a long-standing supplier to Northern Ontario, and in fact, Canada's mining industry. So ladies and gentlemen, please welcome our third speaker of today's event, Mr. Mark Utting, who is the Vice President of Investor Relations for Kirkland Lake Gold, a company that has truly grown to one of the top gold producers in the world. And, from an investor standpoint, it's on everybody's dance card. And one of the gentlemen that helps to make that happen is Mark. Mark, thank you so much for joining us today.
Thanks very much. Hopefully everybody can hear me okay. Yeah, it's a pleasure to be involved in today's event. The event up in Timmins in early June every year is one of my favorites. It's a real highlight on my calendar, and it's something I look forward to. And the reason I say that is having a mining show in a mining town this time of year is very interesting and very exciting, because what you really see is the contribution that our industry makes in terms of employment, investment, and prosperity in Northern Ontario. And actually, you can say about that right across Canada and around the entire world. So I'm looking forward to when we can put an end to the virtual conferences, although they're better than nothing, and actually get together again in places like Timmins, because as I say, it's something I really look forward to. Yeah, I want to talk to you about Kirkland Lake Gold today. I'll flip over the next couple of slides, which is our disclosure information. And really, I'm going to see if I can lower this too. So Kirkland Lake Gold, senior gold producer, for the benefit of those who may not know us. We have three high-quality cornerstone assets in very good jurisdictions. We've got the Macassa mine, our foundation asset, and Detour Lake, which we acquired last year up in Northern Ontario, and Fosterville mine in Victoria, Australia. These are three very profitable and cash flow generating operations. Probably more interest to people on the phone today is the fact that all three of these assets have significant value creation upside that can be realized, and we are realizing, through continued investment in exploration drilling and in capital projects. And we have a very extensive program going on at all three of them. Given how profitable the company has been, it's not surprising we have a very strong balance sheet. At the end of March, we had just under $800 million of cash and no debt. Typically, last few years, it's been over $500 million of capital expenditures. Will be a little more than that this year. In terms of total procurement, last year we had 1.2 billion, and these are all US dollars, by the way. 1.2 billion in total goods and services procurement, and over 300 million in wages and benefits, and I'll talk more about that in a moment. We are a company very committed to responsible mining and all issues related to ESG. We are a leader in many areas, and I'll touch on that. We actually recently published our 2021 sustainability report. I invite you to read it. What it indicates is a great deal of progress that's been made. I wouldn't say necessarily in the things we do, because we do a lot and always have, but really we've done a lot of work in the area of disclosure and reporting. And again, I invite you to read the report over and let us know what you think. The last box on this slide talks about effective strategy. Basically, the strategy of our company has been to identify assets where we see an opportunity to create value that is not, or I should say unlock value that is not currently recognized in the value of the asset or necessarily the share price of the owner. Fosterville, and I'll say it's value that can be unlocked through a commitment to exploration, drilling, and investment. Fosterville is a perfect example of this. We acquired it in late 2016. Market did not like the deal. Share price went down 45%. But what we saw was an opportunity for grades to get meaningfully better at Fosterville through extensive exploration drilling. And in the first year we owned it, we spent more on drilling than had been spent through the entire life of the underground mine. As many of you will know, it was a complete success story for us. We proved we were right. We transformed the mine. And today, Fosterville is truly one of the most profitable mines, certainly in Australia, and if not the world. We believe we're going down much the same road with Detour Lake, which we acquired a year ago, January. We believe at Detour Lake, and this is largely the investment thesis for the transaction, that there is a much larger deposit along the Detour mine trend than is currently reflected in the mineral reserves of the mine. And this provides substantial opportunity for value creation. We did 70,000 meters of drilling last year. We're doing over 270,000 meters this year. We've had significant success. I think we've had 5 or 6 press releases now. And what we're seeing is that we're right, and we think we're poised to create significant value at Detour. I'll talk more about that in a few minutes. Just touching on sustainability a little bit more. First quarter of this year was an important quarter for us. We pledged to achieve net zero emissions by 2050 or earlier, and we already have a head industry leader in minimizing these emissions already. We followed up that pledge with a commitment to invest $75 million a year for 5 years in 3 key areas: advancing and commercializing alternative fuels and energies, and creating the mines of the future through greater use of digitization and automation. Both of these are squarely aimed at helping us to further reduce our emissions. About a third of these funds will be invested in our communities in the areas highlighted on slide 5. This is very good news for communities like Timmins, Cochrane, and Kirkland Lake. I mentioned leadership in a number of areas. Again, we are a leader in minimizing carbon emissions already. In fact, according to the World Gold Council, our greenhouse gas emissions on average are about a third of the industry average. Macassa mine has some of the lowest greenhouse gas emissions in the industry by virtue of the fact about 90% of the fleet is battery powered. We also do very well in water management and in area mine reclamation. I can tell you last year, Detour Lake Mine won the Tom Peters Memorial Mine Reclamation Award for its progressive reclamation program. It involves rehabilitating 10 hectares of land per year starting in 2019. I talked about our investment dollars earlier, but I can break this down for you a little bit more. Of the $1.2 billion of procurement spending last year, about $800 million of it was in Ontario, and most of it was in Northern Ontario. Over $300 million of total salary and wages, about $240 million of that in Canada, and the vast majority of it is in Ontario. One other thing on this slide I want to point out is in the middle, you'll see a box that says goods and services from companies with Indigenous ownership totaling $263 million. This is an important part of our efforts to build, maintain, and continue to improve our association and our relationship with our Indigenous partners. We make significant direct payments. We have constant consultation. We believe we've made good progress at Detour Lake with our relationships with the First Nations. We have an IBA in place at Macassa and our other assets in that area. And it's a similar situation in Australia as well. This is a very important to us and a very important part of our business. Now I want to move on to a different area and talk to you about where we see ourselves. And what I mean by that is, as a company, where we are today, we find ourselves in terms of the potential for Kirkland Lake Gold to outperform the industry. I know a lot of companies, or virtually every company will tell you that, but I've got some very specific reasons I'm going to point to. First, at the end of last year, we had to announce to the market that we expected to have a weak first quarter, or at least very weak relative to the other quarters of 2021. Well, we actually beat the guidance we had put out for that quarter. But even more important, we're now poised to have 3 very strong quarters over the rest of the year. In fact, in the second half of this year, you can see from the slide, we expect to do something approaching 750,000 ounces at all-in sustaining costs of something around $700 an ounce, extremely low. And if gold prices stay anywhere close to where they are today, you should see some very strong financial numbers from Kirkland Lake Gold over the balance of 2021. The other reason is that we think we're going to outperform is because we have a number of key catalysts, valuation catalysts, coming in a relatively short period. First, at Detour Lake, I mentioned the exploration drilling we're doing. Issued a technical report in March, which really work we had done, but did not reflect the exploration success we're having. It showed a number of improvements and in itself was a key milestone for the company. But what we're looking at doing is issuing a new mine plan in the first half of 2022, which will bring in all the exploration success we've had and the full impact of business improvement initiatives we've been doing. And we think it's going to include significant value creation opportunities and could be transformational for the mine. At Macassa, we're in the process of building a new mine at Macassa. We're sinking the number 4 shaft. It's over a month ahead of schedule, and it's targeted to be done in the second half of next year. At that time, as I said, we basically have a new mine. Production will increase by 150 to 200,000 ounces. All-in sustaining costs this year to be somewhere around $800 an ounce, will improve to under $600 an ounce, and it'll start a whole new chapter in exploration in the Kirkland Lake camp. Finally, at Fosterville, we've pulled back production at Fosterville to increase the mine life while we continue to drill. What I can tell you is, one, Fosterville remains one of the most profitable gold mines, certainly in Australia, if not the world. And two, there is nothing in our share price today for future exploration success at Fosterville. We're investing around $90 million this year on exploration. We have multiple targets, all with very favorable geology, and we think the prospect for exploration success is very encouraging. Next couple slides just show you what we've done over the last 5 years in terms of our performance. We've run up our production. We've also consistently improved our unit costs. We did improve unit costs, increased unit costs when we acquired Detour. However, Detour, we saw an opportunity to take on sustaining costs from close to $1,200 an ounce before the deal to under $800 an ounce. And you're going to see that we're on track to do that. And that's significant value improvement potential right there. This just shows you our track record of financial performance. As I said, we really led the industry over the last few years in earnings, and we generate a lot of free cash flow. This is an important slide in terms of if you want to compare us to other companies. What this shows, and I'm going to zero in on the red box on the second column. What this shows is we're the low-cost producer in the industry, and 100% of our assets are in top-tier assets. And relatively speaking, we have a long mine life index. So you would think we would have a premium valuation. Where we're valued today, I would say there's significant upside in terms of the multiples on our company. Now I'll just get into the assets a little bit. As I mentioned, we issued a technical report for Detour Lake earlier this year. We very much regard it as an interim step. It had multiple to it. We're increasing production as usual for the next 4 years, then going to 800,000 ounces. That's higher than it's been in the past. And I mentioned the opportunity to improve unit costs. You can see it here. Over the next 5 years, we expect all-in sustaining costs at Detour to average $775 an ounce. This is going to be a very profitable mine. And really what's exciting is the exploration results we're getting. I mentioned the investment thesis that we think that there's one large deposit running along the Detour mine trend here. Key target for us is the saddle zone in between the existing main pit and the future west pit. What we're seeing is a continuous corridor of mineralization, continuous corridor of mineralization in between the two pit locations at very encouraging grades. And what we think we have the opportunity here for is, rather than multiple smaller pits, the opportunity for one large pit leading to significant growth in reserves, improved production profile, and a significantly improved unit cost performance. As you can see from this slide, we see the day that we can transform Detour Lake Mine into one of the world's largest and most profitable gold mines, and we're making very good progress. Macassa, you can see the impact of the number 4 shaft. Production this year is expected to be 220, 255,000 ounces. It's going to go to over 400,000 ounces in 2023, the first full year of the shaft. I don't have all-in sustaining costs here, but I've given you the numbers before, and I'll tell you, a mine that's producing over 400,000 ounces at all-in sustaining costs below $600 an ounce is an extremely profitable mine. What's very encouraging too is the exploration potential. I won't get into this in too much detail, but this is the South Mine Complex in the gold color near the middle of the screen. We've been successful in extending the South Mine Complex to the east, to the west, and at depth. It continues to grow, and our ability to replace reserves is something that we have a lot of confidence in. But if you look at the next slide, the key breaks or faults that run through the camp, the traditional amalgamated break. You can see too the location of the number 4 shaft location, much more central to the camp than the existing number 3 shaft. When we complete the number 4 shaft, we will be able to run exploration drifts across the camp and explore the 2 breaks. And we have already discovered areas of high-grade mineralization along both the amalgamated and main break. We think the future of the Macassa mine is extremely bright. Excuse me. Then finally, looking at Fosterville, I said we had pulled back production. We did that simply because we wanted to extend the mine life of the mine in order that we can continue our drilling programs. We have a number of large mineralized gold systems at Fosterville, and I'll show you a visual in a moment, but you can see here that even with the production levels we're talking about, you're going to look at a continuation of an extremely low cost, very profitable operation that's going to be extended, that's going to allow us. This slide just kind of gives you a sense of where the targets are. As I said, we have multiple large gold systems at Fosterville, all of which we've intersected the quartz with visible gold that made up the high-grade Swan Zone that really transformed the mine. We haven't found concentrations of it yet that would constitute another Swan Zone, but with an exploration budget of 85 to 95 million and a number of targets to drill, we're very confident, one, we'll be able to replace reserves each year going forward, and two, that there will be additional high-grade areas at the mine that will continue to supplement the grade going to the mill. And just like our 2 Northern Ontario assets, we think Fosterville has a very bright future ahead. That gets me back to kind of my overview slide, and rather than going through that again, why don't I just open it up to questions?
Mark, thank you so much for very comprehensive. I mean, that's a lot of information packed into approximately 10 minutes. I know that you do this on a regular basis as the head of investor relations for the company, but you know, all I can say is, wow, you know, what a great story. You know, whether it's Detour, whether it's Fosterville, whether it's Macassa, that story, there's so many more chapters that are left to be written about this great company. I'm thinking that's sort of a broad overview. That's a fairly true statement, isn't it?
Oh yeah, I mean, as I said, I mean, if you look at the company, that we think there's going to be a lot of good news, transformational in many respects, and it really gets back to the fact of what we look for in assets that we acquire, because essentially Kirkland Lake Gold is of today really came together through the acquisition and combination of 4 junior producing companies, and to make one much stronger one. And but what we look for is that opportunity to create value, or the opportunity to crystallize unrealized value that we see that is not reflected in the current value of the company. And the thing about these 3 assets in particular is you can invest and drill and realize that value, and then you do your investment and it gets into your operations. You work very hard at achieving operating excellence, and then you get the kind of results that we've had. But with these 3 assets, what you find then is there are then new opportunities that continue to come up, so that explore, develop, operate cycle continually repeats itself. And we think that's going to be the case for these 3 assets for a very long time. You know, I mentioned the exploration potential in Kirkland Lake. Well, you know, we're drilling a lot in the South Mine Complex. We're drilling a lot along the amalgamated break right now. We've got a new high-grade corridor mineralization along the main break that we're not doing a whole lot on now because we're developing an exploration drift. But that's going to be another opportunity for us. And then we expect additional opportunities on top of that. So it's just this constant cycle of explore, develop, operate, and generate significant and superior financial results. We think these three assets have the potential to just have that cycle repeat again and again and again.
Well, we've just got maybe 2 minutes left, Mark, and I just want to share a comment, I guess, and then sort of one last question to kind of wrap things up. The comment is this: is that you said at the top of your presentation, that we all do miss the big event and getting together in person, and here we are virtually in this particular event, and that it's centered here in Timmins. I think we'd be remiss if we didn't, give a big shout out to Kirkland Lake Gold and Tony and your entire senior management team for the decision that you made to locate your Canadian Operations Center here in Timmins. So a shout out in that respect. The second thing, would be a question, and I know we don't want to talk about specific, junior companies that are in the area. We do know that, Kirkland Lake Gold does have some JV relationships. Can you kind of, in broad strokes, talk about those relationships without obviously, not pointing fingers, but mentioning any specific company, but the overall strategy there and what you look for in a JV partnership in and around properties like Detour and Macassa?
Sure. Well, I'll deal with your first comment / question first. Yeah, we're very pleased to have opened up our office in Timmins. We have a couple hundred people, I believe, working there. And, obviously, a lot of you will know Tony's born and raised in Timmins, and there's other people within our company that are as well. I personally have a great deal of affection for Timmins. I worked with Lakeshore Gold for 9 years and it became sort of a second home for me up there, almost going to Timmins, West Mine, and Bell Creek. And love the community, absolutely love it up there. But from a business standpoint, this is a real opportunity for us because, we have Detour Lake, we have Macassa, we have other assets up there, and to create sort of a central hub, if you will, that's just good business because it gives you the opportunity to leverage the skill sets and leverage the people you have in multiple different areas, and to locate them centrally really offers a number of advantages for us. And let's face it, I mean, when it comes to mining, Timmins is such a hub and such a center for it. To have your office in the midst of it all just is a great situation, I think, for us and for Timmins as well. In terms of the investments we make, yeah, we've made a number of investments in junior exploration companies and development companies, and what we do is we support companies where and look at the end of the day, you can whittle it down to geology, where we like the geology, particularly coupled with the fact that it's in a location strategic for us. We do have investments in and around Timmins. We have an investment in Melchior that's fully public information, a JV that we work there. It's an area we know very well. We have an investment in Walbridge up by Detour Lake. These are strategically located areas. And one thing I should also point out that's very significant, I didn't mention it in my talk, is we have a strategic alliance with Newmont in Northern Ontario, where we've agreed to work together in our portfolio for assets and regional assets in our portfolio as well as theirs, and look for opportunities to work together to advance potential projects or potential exploration sites that could become development. Not a whole lot to report on that yet, but that's another avenue in addition to these strategic investments we make, another avenue for you to look for potential growth in the future. But in any of these things, though, it really comes down to geology more than anything else, and do you like it? Let's face it, along the Abitibi Greenstone Belt and along the Destor-Porcupine Fault, there's just a whole lot of geology to like. So it's going to be an area we continue to be very active in.
Well, you put that very, very well. And Mark, thank you so much for your contribution here today to this global event. We know we've got participants from around the world that have dialed in to see what's happening here in one of the world's premier mining jurisdictions. We are thrilled that KL Gold has not only contributed today through your presentation, but as a sponsor as well. And we know that the story of Kirkland Lake Gold, I think it's just getting started. And I think there's a great future ahead. So for those of you that are investors today, congratulations to you. If you invested, 10 years ago when the shares were favorably priced, if I can put it that way, good for you, because you've done very, very well. And I think that anybody going forward is going to certainly enjoy their connection to Kirkland Lake Gold. And I know that we do here at Canadian TradeX, Mining Life and Exploration News, and now Vertex. Mark, thank you so much for participating today.
My pleasure, anytime. Have a good day. Enjoy the rest of the conference.
Thank you.